Good day, ladies and gentlemen. Precious Metal Summit 2014 here in Zurich. And with me here, a very interesting company with a totally different concept than we had the last 2 days, Euromax Resources. And we are now talking to Steve Sharpe, who's the president and CEO of the company. Steve, thanks for taking the time.
Thank you very much indeed for welcoming me here. It's very
Give us a short, idea about your company.
No, absolutely. I'd be very pleased to do so. It is probably the most unusual mining company that there is, particularly in the precious metal space. And that is that we are building a mine and we're going to debt finance the whole thing. The equity portion will be very small indeed, but it will receive a running yield that is hitherto unprecedented.
Mm-hmm. So you're taking over an old mine and you...
No, it's a new mine that we're developing.
Okay.
So we're developing it to world-class standards. We used to have, our entire management team used to have some mines in northern Greece, and we sold those to Eldorado for $2.5 billion 2 years ago. And instead of retiring, we moved 60 kilometers over the border into Macedonia because we could see the potential for doing the same thing all over again.
Fantastic. Okay, so how far you are now with the whole project? What's going on there? What is the financing situation?
Okay, the Macedonia was a new place for us, and we didn't really appreciate the permitting situation in Macedonia. And permitting in Europe is probably the biggest issue. In Macedonia, we are already permitted. We have all of our permits, so we are moving straight through now into doing the definitive feasibility study and then into construction. And we start that in 2016. That's the right way to do permitting. It means that we can proceed with confidence knowing that there aren't going to be any issues with the local community and government, etc. On the financing side, we've always said that we would debt finance it. And I don't think
the whole thing with debt?
The whole thing.
Yeah.
Well, pretty much the whole thing.
Okay.
I don't think anybody believed us. And particularly with a company with a market cap of $30 million. How could you raise 500 million, which is what we're raising?
Oh,
in
that's
order
a lot.
To build it.
Yeah.
And the raw gold streaming deal that we've just announced of 175 million, this early on at pre-feasibility study stage, is the first time anybody has done a deal of this magnitude and relative to market cap and with this level of commitment. It's taken 6 months of intensive due diligence for them to get to this point, but
they must be really convinced.
They're absolutely convinced. Not only did they have independent consultants reviewing all of our technical work, but they also had independent consultants reviewing the work of the consultants. So 2 sets.
Double check.
Yeah, absolutely. And so, we're absolutely delighted to have them on board, and it really sets the scene as to how we will develop this project, because it represents 12.5% of our overall revenue, averaging out about 14% of revenue on the gold stream. It's 25% of gold production, but it gives us 30% of our requirement for capital expenditure. So it's 160 million towards capex.
Yeah, fantastic. And I think also it's a big sign for banks or potential financiers that they did the first move and they say, hey, listen, guys, we made a due diligence. We like it.
No, absolutely. Yeah. I agree 100%. And the interesting thing is on the bank side, because we're about to announce that the project finance banks that will be sitting alongside the raw gold stream, they luckily benefit from the German government guarantee because we deliver to the Perdop smelter in Bulgaria, which is owned by Arubis. And because it's owned by Arubis, we can participate in the UFK Untied Credit Guarantee Scheme. So for a project finance bank, it makes it very easy. It's German government risk. So 500 million sounds like a lot, but then if you've got 160 million of streaming finance, 215 million of project finance, which is the number we were targeting, and $25 million of equipment leasing, the net amount you have to find is about $100 million. And there are various options, equity, potentially, but not at these prices.
No. Don't do that.
Alternatively, the value of that offtake, being in the centre of Europe, is very significant for the big traders.
Yeah.
And we reckon that just having the certainty of that offtake is probably worth about $50 million.
And I think you are here in the right place in Zurich, because
Absolutely.
in Zug we have the Trafiguras, the Extradas. In Lucerne we have the Trafigura actually in Lucerne. Yes.
Yeah, no,
And
absolutely.
so
And
I think,
believe me, we have had discussions with a number of very well-known
I believe that.
off-takers.
Fantastic. No, this sounds really, really outstanding, and it's really a total different story. We did 25 interviews in those 2 days, and you are completely different. I like that. Can we get to maybe some more numbers? Now we had roughly 450 to 500 million in financing.
Yeah.
How much you think you're going to produce, and can you say a little bit about the cost structure, like all-in costs? I know it's not definitive now, but maybe a little bit of guessing.
No, it's fairly definitive.
Okay.
No, absolutely. We will produce 95,000 ounces of gold and 17,000 tons of copper every year for 23 years. And that's the thing about, this is why we're debt financing it, because it's a very simple copper gold porphyry. It's low grade, it's not exciting, there's no upside as far as the grade's concerned. It is what it is. It's an amorphous blob. And so the infrastructure cost, and this is where it really works, being in Europe, we're right next to the railway line that goes to the Perdop smelter. So the transportation costs are really low at $45 a tonne. Equally, we could go to Thessaloniki, I suppose. But the all-in cost of production there are various ways of looking at it. If you do the copper as a byproduct, so you just report the gold cost, it comes in all in at $330 an ounce. 330.
Yeah. Wow, that's a bargain. That's a margin I like.
But bearing in mind that it's 50-50 copper gold,
sure.
So that really is very dependent on the copper price. If you average it out across the two metals and apply it to gold, then that would equal an all-in cost of $600.
Yeah, which is still fantastic.
Which is still fantastic. I mean, there's still plenty of room for manoeuvre. I mean, the point about this mine is that you would not build it anywhere else in the world other than Europe. Because in Africa or in Kazakhstan or somewhere, the infrastructure costs would kill you.
Yeah, absolutely.
But because we're on grid power, we've got paved highway, we're by a railway line, it means that the infrastructure is already there. I mean, and that's what makes it work.
Fantastic. At the beginning, you said you didn't want to retire because you sold this asset to Eldorado in Greece. And so, of course, my question is, what is management share in the company?
We have 14%.
14%.
Yeah.
Okay, that's a fairly nice amount. Who are your next largest shareholders?
Actually, we don't have many institutions on the register, interestingly. Investec Bank have about 10% of the company. Otherwise, it's pretty much friends and family. And so most people don't know about us.
Yeah, fantastic. No, I like that. That's outstanding. Absolutely. Besides the royalty stream you have done so far, what is cash in the bank? Are you enough cashed up that you can say, okay, maybe this market downturn lasts a bit longer, negotiations take longer? So do you have enough cash not to get under pressure?
Oh, absolutely. The raw gold stream is a very sensible stream. It's phased in a way that we receive $7.5 million immediately. Another $7.5 million in a year's time, and then at the point of construction we receive $160 million. So we're fully fine, and we've just alluded to a 5 million equity placement as well that sits alongside real gold. So we have more than enough cash to see us all the way through right to the point of construction. So the downturn can stay for as long as it comes back in 2 years' time.
But it has to. At some point, it has to, because otherwise, I think the resource investment seed would be diminished.
No, absolutely.
Great. No, fantastic. Thank you very much on that, and we look really forward. I think Macedonia is a great place. I think they already belong to the European Union. I think they are not totally adopted, but they have already some of the rights and regulations adopted.
They are absolutely. All of the laws are consistent with the European Union.
Exactly.
The only thing stopping them is the name Macedonia. Yeah. Because Greece objects.
Yes, that's right. Yeah. But anyway, well done. Thank you very much. We look forward on some big news then with the financing, with the banks, and with the consortium. Hopefully everything goes well. And I think you did a major important step was the Royal Gold thing.
Great.
Great. Thank you very much, Steve. Thank
Cheers.
you. Yeah, ladies and gentlemen, it was Steve Sharpe from Euromax Resources. Well, you heard it. It's outstanding, company outstanding mine project and a mine, bringing it into it with Royal Gold, 175 million gross proceeds now for the company here. And of course, with a partner like them, I think a bank financing is really manageable, even if we talk about another 300 to 400 million. And Macedonia, it's a great place, definitely. It's European Union area, so rules and regulations are quite clear. And I think the guys did a good job so far, and we look forward to the next news. So check out the company. Thanks and bye-bye from Zurich.